Thank you, Barry. I filled in last year as MC, and I can say 100% you're in better hands this year with Barry. It's a real pleasure to be here, and I'm going to move state of the industry. That sounds pretty big and bold, so let's move on to the next slide. This is very, very exciting. This is the second year, and as Jonathan said, it was only about 18 months ago that we had that conversation with Daniel and with Tanya in Riyadh. And to flash forward to where we are today, I think we're in a really exciting space. I think this event, not only did it inspire Riyadh and Bangkok, it's inspired similar events that Peter and others have been in around the world. And I think we're really at a crystallizing moment in terms of branded residential. This is a space that has absolutely gone from niche 15, 20 years ago when Barry first started in it to truly mainstream, driving not only hospitality, but driving the very top end of residential development around the globe. So it's an exciting space. I pause on this slide because this slide really is the ecosystem. And I think one of the things that's really become clear to folks like myself and JD and to Jonathan Wingo and others that are in the space is that when you hold an event like this, you really pull the ecosystem together in a single room. All the people that make these projects possible and successful in what they are. The architects, the interior designers, the investors that make the project possible, the sales and marketing companies, the branding firms, and so on. And so I think through rooms like this and the discussions that follow, I think these are really, within this room, we have the ingredients of the next generation of wonderful projects around the globe. My role today really is to set up the agenda that follows. As Barry touched on, there are a number of very interesting discussions that will follow that will dig deeper into the issues that really shape and drive the success of these projects. And what I'll try to layer in first is some of the key concepts, some industry drivers, and some thoughts and comments in terms of where the industry is going. So in terms of setting the stage, and a closer look at key concepts, and here you see a wonderful example of a W residence right here in Dubai. If we start with the simple definition of branded residences and just make sure that we're locked on concept, when we talk about branded residences, we're really talking about a private home, a primary residence or a second home that is developed, marketed, and sold to the standards of an internationally recognized brand, taking the form of a villa, a chalet if we're in mountain resorts, and an apartment, sometimes with rental programs, very frequently under a hospitality brand, but increasingly under fashion, automotive, and design brands. Now, the role of the developer, which of course is all important. The developer, of course, is responsible. Now, I'm looking behind me, and of course, there's two screens right in front of me that tell me everything I need to know. The role of the developer, of course, is to finance the project, to prepare the governing documents, and generally to lead sales and marketing. Where the brand steps in is, of course, in terms of the grant of the license, really the immersion to enable those that are designing the product, those that are bringing it to market from a sales and marketing product to really understand the brand and to bring it to life in the domain of a private residence. And then finally, the operator itself, what the brand may do in addition to this is the brand may operate it, may franchise it, may get involved from a sales and marketing perspective in terms of lead generation, and in some cases provides a real turnkey solution in terms of HOA governance or administration. And so I pause there for a moment because those are the sort of things to look into. When an investor is looking for the right partner, I think what the investor needs to do is really take stock of the solution that brand is lined up to provide and make sure that it addresses each of the buckets that the investment partner is potentially looking for. Now, from an investment perspective, the headline number here, or the headline, is really brand premiums. You'll hear a lot of talk, and I no doubt this will come up in the panels that follow, the ability of the brand to drive a premium. When we talk about brand premium, what we're really talking about is the incremental price that the brand helps the investor realize on a like-to-like basis. So a branded product versus an independently branded product of similar location and similar spec. And what you'll hear from Rihanna Tani at groups like Global Branded Residences and the team at Savills, and quickly, a lot of the data that it's to follow is thank you to both of those groups. So a big shout out to Global Branded Residences and Savills for the data insights that they provided for this deck. But what you'll hear from those groups when they report time and time again is that those premiums have averaged now for about 15 years north of 30%. And in fact, this year you'll see it's gone up yet again. For investment partners, it's also about absorption, selling faster. Of course, selling faster accelerates capital returns. And for those of us in the audience that are co-locating hotels with branded residences, it also adds to the economics of those properties. There's opportunities to share spaces, to share services, to carry overheads and pass some of those overheads along to the residential component that otherwise would be carried by the hotel. So it makes these investments more efficient, while at the same time creating very often a level of service that just simply wouldn't be possible in the absence of the residences. Now, making sure. Now, this model comes typically in two forms. We talk very often, and here you see a great Six Senses example from London, co-located with both hotel and residences. So that co-located model is probably the most common model, but increasingly we're seeing that branded residences are developed independently of hotels on what we call a standalone basis. Now, I think it's appropriate, particularly at the juncture that we're at right now, to rethink standalone. Now, standalone's become very important to all of us. I can see JD nodding. I think for groups like Accor and Marriott, it's about 30% of our signings. We talk about standalone, and what we mean by standalone is that it's developed separately in a different location from a hotel. But maybe that's not the way to think about it, because I think what's happening more and more today when, quote, standalones are being developed, they're being developed independently of a hotel, but often alongside some sort of hospitality engine that helps to drive and elevate the service offering. So private clubs, golf components, yacht and marina concepts, or with a destination food and beverage concept. Now, when it comes to branded residences, there's a real delicate balancing act, particularly when it comes to both design and when it comes to service offering. So on the one hand, a real important part of the value proposition is this notion of 24/7 on-demand services. And hotels, private clubs, they can elevate and provide that service lift to elevate the experience. But at the same time, what we need to be conscious of is that what we're selling and what we're marketing together is a private residence. And so often exclusivity and privacy and that recognition implicit in the design that this really is someone's private home is absolutely paramount. So when we're talking about design, access and integration is very important, but it's really one-way access. It's from the residences into the hotel. It's very often discrete access, which means that the access isn't through the public spaces, through the lobby of the hotel. Perhaps it's discrete access into the wellness component. So residence owners can very privately access those facilities and yet return to their privacy of their home. At the same time, we need to be able to service appropriately. So for organizations that have been in this space for a long time, we know that there's a different tone, there's a different approach that we need to take with residence owners. There's different services, different programming that are appropriate for a residence owner versus one of our hotel guests. And so it's that nuance, if you will, that delicate balance that's very, very important. It's become a very, very competitive space in terms of design and in terms of programming. We're seeing these, again, being developed at the very top end of their property markets worldwide, and those buyers are seeking and demanding innovation. We're seeing listening rooms and sound studios, private dining concepts where concierge can arrange, so not a commercial food and beverage outlet, but a private dining concept that's part of residential common areas, whereby Barry, I think that calls for you, whereby a residence owner can arrange through concierge to have a private chef prepare a meeting for their guests, whether those be family members, colleagues, or networks to belong to. Longevity and wellness, as Jonathan touched on earlier, very, very important to the space. We're seeing biohacking spaces that really break down everything to allow the body to recharge, from mindfulness suites to places where you're going to undergo longevity treatments, et cetera. So a very, very demanding, very, very innovative space. For those that are sort of focused on operating these projects, it's also demanding. There is a scarcity of talent, and it's very unique talent. It's talent that not only has hospitality experience, typically at the very top end of the market, five-star hotels, very demanding lifestyle hotel environments, but it's also expertise that needs to span residential property management, even governance in terms of how to look after the affairs of body corporate. corporates. And so if you look at the profile of those, they don't necessarily exist in a pure play hotel environment or in a pure play residential environment. It typically requires talent that has experience across both. And in a number of markets, we see that in very, very short supply. So what a lot of the brands and a lot of the operators are really doing is doubling down in terms of developing that talent within their own organizations. And what we're seeing is that the leaders in these organizations who have led mixed-use projects with both hotel and components, those are the ones that are oftentimes arriving and securing the next big opportunities in their organizations. As Raul from Digiv LA can tell you, the residence tech stack for residents is bespoke and it's unique to a private residence environment. There are solutions that we've been building together for years and years from a hospitality, hotel, and resort perspective that don't solve all of our problems from a private residence perspective. We need solutions in terms of HOA or body corporate management to make sure that the finances of the hotel assets are entirely discrete from the finances of the private residence assets. Rental programs, which are a very, very common feature of resort projects, very, very important, and they require their own business solutions to drive that space. Private homeowner exchange solutions, again, require bespoke solutions, and maybe the most complex area is global recognition. And you'll see from many of the brands, they have programs to really recognize residence owners for doing what they're doing, really making the ultimate commitment in the brands that they're buying into to recognize them across their respective ecosystems. To be able to recognize homeowners, though, in portfolios that often are north of 5,000 hotels and resorts and many, many brands, you need complex CRM solutions. So that ability to recognize a residence owner not only locally, but globally across the ecosystem is also a very demanding aspect of the space. There is a panel on legal. Legal structuring is very, very important. This is all the hard work that's done at the outset of these projects. When we structure these projects properly, it's easy for a buyer to understand if the community will operate in a way that's aligned with the lifestyle that they're seeking. So it's very important for a buyer to understand, for instance, whether or not it's a property that is going to enable short-term rentals. Maybe they're looking for something in London or Dubai that's entirely private and exclusive. It's really the governing documents that speak to that. It's also about protecting the prestige of these mixed-use developments. When we design governing documents properly, we protect the hotel assets and the asset owners that own the asset that actually anchors the mixed-use development. And there's another important piece in terms of the shared services model. And the shared services model is really the model by which we allocate shared energy costs, shared services that are related to these complex mixed-use developments. And particularly in more litigious parts of the world, this is very often the place where these projects can fall down. If we don't develop a transparent and rigorous methodology of isolating the hotel costs from potentially office components and residential components, we have the risk of having breakdown in relationships with homeowners, which in some parts of the world, and Peter's nodding because he knows very well from his time in the US, that in places like the US, Australia, Western Europe, things can break down very, very quickly if we don't get this right. In terms of bringing brands to life, what we see time and time again is that brand activation benefits significantly from experience. And we're very fortunate in this space, and you'll hear it in the sales and marketing discussions that follow, that there are a number of groups, both in terms of real estate branding agencies, but also in terms of brokerages and salespeople, that have a lot of experience taking a well thought through and structured branded residential offering and translating it in a way that makes the value proposition very, very clear and compelling to buyers. And so you will see both from the investors in this space and the operators in this space, for good reason, they're going back time and time again to these very, very experienced firms. And those firms play a real key role in unlocking the sort of brand premium that groups like Savills and Rian at Global Branded Residences have been able to identify in their studies. So quickly, with the time that we've got left, a little bit of market perspective. Very, very dynamic space. Nearly 800 residences operating around the world, 1,000 under development. 75% of those are hospitality branded. That's down, as we'll see in a moment, as a little bit from last year. So that design, food and beverage, automotive space is continuing to grow. Very attractive compound annual growth rates. up 0.1% to 13% this year. As I said, the brand premium average globally is ticked up again now to 37%. And there are now more than 300,000 homes that are branded in this space. That's up about 45,000 from a year ago. Doesn't sound like a lot in the grand scheme of things, but if you think these are all homes typically, again, that are being developed at the very top end of their respective markets. This is a business that started in earnest about 2 decades ago. It was really a US-focused business. The epicenter of that business has absolutely moved to this part of the world. 60% of supply is now in Europe, Middle East, Africa, and Asia Pacific. And it's not a surprise that in terms of this series of events that Jonathan and the team have created, that this is the most well-attended event because so much of this activity is happening right here, as you'll see in a moment. This is the leaderboard in terms of groups. The leaderboard itself is not so important. I think what is important is that to be competitive in hospitality today, the operators have clearly recognized that you have to be providing solutions for your investment partners that span mixed-use developments, that cover not only hotel assets, but that add significant value to residential components. It was once perceived as the exclusive domain of luxury. Certainly no longer the case. You can see that premium and mid-scale brands, and we have a wonderful reception that together with Ennismore, we're hosting at Mama Shelter tonight, which is a mid-scale brand that absolutely punches above its weight. You can see premium and mid-scale continues to grow. So luxury space a year ago was about 70% down to 66%. This segmentation is also very interesting. Classic luxury brands continue to do a lot of the heavy lifting at 63%. You can see the fashion and the automotive design brands continue to grow at 22%. But coming up the middle is a very new, interesting generation of lifestyle and leisure brands. Brands like SLS, brands like Rixos, brands like Hyde that are really helping developers target new demographics and new psychographics that were perhaps underserved by branded residences, almost certainly underserved by branded residences 5 to 10 years ago. 3 markets worldwide in terms of country markets account for 50% of the supply. And not a huge surprise, the US being number 1. On its heels, the United Arab Emirates, very closely behind Mexico, and I think a number of us know, I know Peter's very involved in Mexico. There's an awful lot of activity going on in Mexico right now, and it has that momentum. In terms of cities, very similar story to last year. Dubai continues to lead the way. There are 2 key markets globally, Dubai, New York, and Miami. Miami, tremendous amount of activity there. But interestingly, Dubai, when you measure supply, in both in terms of what's operating and what is in the pipeline, it's now nearly 2x of Dubai. Here we see Dubai, first branded residence in 2007, very, very similar story, an even higher growth rate, probably not too much of a surprise. 72% of that is hospitality branded, and there have been 15 branded residence project launches, as I was sharing with Mark Dardan earlier today, in the last 12 months. That's down just a little bit from the torrid pace of 2024, which was 25. So what's driving all this growth? I think it is consumers who are seeking authenticity, story-driven approaches, and stronger platforms. It is this huge entry into the market of new offerings. As Chris Graham will tell you, there are now more than 200 brands that make themselves available. That is allowing developers in turn to build new solutions and target new demographics and new psychographics, really introduce a new generation of these homeowners to branded residences. And then that is being supported by all these great platforms. I saw Jonathan Wingo earlier from Hilton, Julian and JD are here from Marriott, and groups like Accor have built very, very robust platforms that are giving developers and consumers even more confidence. And so as I wrap up here, I'll quickly introduce Accor One Living. As Barry very kindly mentioned, we've been in this space for about 20 years. We've taken that expertise, if you will, and we pulled it into a single organization that's focused on the development and the operation. So if you work with us on a project, we're working through with you to last sale and on into the operating phases. We're number 2, I will say, to Marriott, number 1 in this space. We have 26 brands on offer, and we look after 8,000 homeowners. And with some very, very final thoughts, Jonathan touched on a couple of them. I think this is the most exciting time to be here. I very, very firmly believe that as dynamic and as exciting as the last 10 years have been, the best is really ahead of us. So first point is the future really is here. In terms of fashion, automotive, and design brands, they're already entering. Private clubs are incredibly important, not only in terms of assets to which we can co-locate very compelling residential projects, but also in terms of concepts that can inform what we build in residential common areas. We think generally in terms of branded residences as specific projects. I think we're going to see very, very quickly there are times, sometimes maybe with the soft brands, with wellness brands, with food and beverage brands, private club brands, to brand entire master plans such that the architecture has a consistent standard, but the brand starts to inform the infrastructure, the services, some of the concepts that anchor entire projects so that we're not talking simply about 80 ultra luxury homes, perhaps we're talking about 1,200 key master plan communities. And there are finally a number of very, very exciting adjacent spaces. If you think about what these brands can do and what the shared services model can do, it's not unique to hotel and residences. We can unlock those same efficiencies, those same synergies with co-working products, with luxury yacht products, in multifamily or buy to let, if you will, by elevating those offerings through brands, services, and standards. And what we're seeing is the premiums in multifamily, when you lend a brand to it, are not that dissimilar to the private residence space. And then finally in the golf space. And very final word before I hand it back to my good friend Barry Landsberg, really innovation doesn't stop. We need to be as bold and forward-looking in this space as we are with our hotels and with our resorts, and we're getting challenged at every end. The consumer, the buyer, is looking for more and more in terms of innovation, more and more in terms of service offering, and where we typically see that is not in the services that are covered by the service charge, but on those a la carte services that residence owners are not only seeking but will absolutely pay for that. So again, a great lineup of speakers. Thank you very much for sharing your time with me this afternoon. Thank you.